Good morning, traders. Today is Sunday, June 19th. I'm writing or creating this video to alert you that we have some serious meltdown in the market still to take place before we're going to find a bottom. I've got my trading view screen up to try to show you some of my custom indicators, and what I want to try to show you is two things. Well, actually, a couple of things. So let me first highlight by moving these bars to the front, and pay attention to this chart. This is my custom U.S. stock market index. This measures a number of different sectors. You can see the rollover we've had back up here at this peak near November 2021, the U.S. market index, and it's broken down very strongly. Pay attention to the fact here that we've actually gotten beyond this selling pressure here. So we're now entering into a deeper selling mode, which becomes very aggressive to the downside. We've blown through these support levels over here, which I will modify to a lighter color, and we're in very deep selling right now into the downtrend. But the reality is we're starting to come across this COVID area, and this COVID area becomes a serious line of support for the markets going forward, which we are now about 6%, 4 to 6% away. In fact, let me try to get a real number there. We are currently about 4% away from that move. So now understand that we've got 4% down to go in the U.S. market, which is probably going to happen next week before we're back down to the COVID highs. But ultimately, we're not going to see capitulation, an exhaustion capitulation move until we get down into this area. Let me draw a rectangle here. We're not going to see any real capitulation until we get down in this area. And this is where my warning comes to you right now. We are still quite a bit away from this area. Try to make that darker. And in reality here, ladies and gentlemen, we have a 18 to 27% move in this area before we are going to see any capitulation selling in this market. And this is something I need you to be aware of. My capitulation trends are measuring from the 2016 low across this low here in December 2018 and across the brief support that was found after the COVID low in March 2020. Now, I want you to understand that this means that we still have a lot of selling to go. Let me take a look over here and try to support this with my U.S. to global custom index. This U.S. index, this blue line, is the exact same line that you're seeing over here as the black line. So understand, it is exactly the same. But you can see how the strength of the U.S. dollar and the real speculative excess phase that took place here in 2020, 2021 has left the U.S. markets extremely inflated compared to global markets. Global markets are already down near these lows. May move a bit lower back down into this area, but really may only have 7, 8% to go before they reach a real bottom. U.S. markets, in order to get down into this capitulation area, has a 20 to 25% downside move, which should be expected before we may see some type of an exhaustion capitulation move even lower. That means that we could be looking at a minus 30, minus 31, 34, minus 35% move from where we're at right now before we see a capitulation bottom or any type of bottom set up in the U.S. markets. Now, additionally, this is my gold, custom gold cycles index. Gold is starting to react, and precious metals are starting to react very severely to the fear that's taking place in the market. You're seeing very strong support in gold right now. This is gold on a line chart on a closing price basis. And this is my gold cycles chart, which is now starting to hook upward. We're getting very solid upward hooking here. You can see the upward move in the gold cycles, the candles prompted a very strong rally in gold here. We had a very strong rally in gold here in 2011 which was seen by an upward move here. But these are excesses. These big moves here, where you're seeing this move way up into the 90s here and 100, these are extreme excesses. These are extreme market moves. We could be setting up for a move that's just unprecedented here. If this gets back above 90, my gold cycles index, we could be looking at a massive move in gold, a massive accumulation phase that could send gold up into the $4,000, $5,000, $6,000 area or even higher. So now let's come back over here and take a look at this. And in reality, what you need to understand is that long term, what is likely to take place here is that we are likely to try to get into this area, into this downward cycle. And you can see on this pitchfork channel, we've broken into this lower 1% channel. Now we're going to be targeting 1.5 and down to potentially 2% breakdown channel in this standard deviation channel, which is a pitchfork channel, before we start to get to this, what I call near-term moderate capitulation low, which is this yellow line right here. At this point, we should be starting to see the potential for a bottom, but we could see a broad washout coming down to this low level here. I'll change that to red. And the reality is this is where I think we're going to see the bottom. If I were to try to explain to you what I think is going to happen here, we're going to see it wash out to this COVID area, briefly pause, wash downward to this capitulation area, briefly pause, and then have some sort of a carry forward, wash out low, and then attempt to move higher. And that's really where I think we're going with this. I think we're looking at, and I wish I could I'll try to spread this out and do it a little better. Oops, still in draw mode. So get rid of this, spread this out, get rid of this dot that I put here by mistake, and we'll try it again. So in this area, what we're looking at is capitulation down to the COVID area, a bit of a pause, down to early stage capitulation, a bit of a pause, down to extreme capitulation, and then maybe finding our way back out of it. We're going to have to get out of this arc. This is our current arc, which is drawing and acting as, sorry, I couldn't do that very well, as our current downward channel. And this one is our primary Fibonacci price arc, which eventually we have to break. So now this one has to be the one we break, and this one here is the one that we are currently channeling within. So understand that this is our arc. Let me try to draw that better. This is the arc that we're channeling within, and these Fibonacci price amplitude arcs are my measure of, or my attempt at understanding what I call what really is Tesla's mechanical resonance theory, that all price moves exhibit a form of energy and amplitude, and by measuring these energy and amplitude levels, we're able to potentially see future price trends as they're setting up. As you can see, we blew through all of these arcs coming higher, reached a resistance area, continued down within this, between these two arcs, and we are continuing to accelerate this downward move. Eventually, we're going to accelerate and break through it, likely right down to this area, which is 730 on the U.S. custom index that I have here, and potentially find some support. What I'm drawing here is the idea that we would break out of this channel, reach this price amplitude arc right here, find some support, and move back up above it. So there's likely going to be our outcome going forward. I'm going to try to make this a little lighter. As you can see, we still have, by my opinion, grab a hold of this, we still have a 10% to 20%, maybe 30% downside move, 26 to 30% downside move down in this area before we reach some sort of a capitulation low in the markets. We are not done selling into this trend right now. Traders need to be very aware that this move within this arc right here, this yellow line, could become extremely aggressive down into this area, this lower area, which would be a 30% downside move before we find some real capitulation low. So we are not done with this selling. We need to understand that the unwinding is excessive. And remember, when you look at this, I've been telling people for months that this U.S. market trend must move closer to this global market asset valuation like we saw back over here in these lows and these lows before we're going to see any type of a bottom. If this continues to sell downward another 6 or 7%, that means that the U.S. market's got about 30 to 35% to go to the downside before we set up a capitulation low. So be prepared. We are not done with this selling yet.